Hey, good evening, everyone. This is Dr. Shawn Bridley. I am coming to you on a Friday, which is rare for me because I not only dislike doing much of anything on Fridays that I don't have to do, but I rarely do anything with the stock market and with my portfolios on Fridays. But something interesting just came across my desk regarding a particular stock play, and I came into my home office to analyze it by myself. And I was like, hey, it might be fine if I go in and do a conference call to go over one of the most asked questions that I get. And that is, how do I go about picking which stocks I invest in? Like, what do I look for? So I'm just going to go through and I'm going to analyze a stock that just piqued my interest. I'm going to go through my own processes fairly quickly with you. There will be an opportunity for you to work with me directly and learn these steps and these processes on your own. But if you can pick them up tonight in this video, by all means, feel free to use them because obviously I'm giving them to you anyway. So again, my name is Dr. Shawn Bridley. I am a pharmacist by trade and I am an entrepreneur. Pharmacy and working as a pharmacist for the last 12 years or so, I have been able to use my earnings as a pharmacist to be an investor and an entrepreneur and pretty much be my own bank because pharmacists make a pretty decent salary. And with my salary, I decided, I don't know if I want to retire doing this. So I'm going to always, always put my money towards financing my dreams, put my money towards financing the things that I'm really, really passionate about. And one of those things has always been the stock market and finance. Like, I don't know what it is. It comes to me. I like making money. So that's just a little quick spiel about who I am. But tonight we're just going to analyze this company stock. I am doing this live. I have not gone in already and looked at this stock. Literally, I was laying in bed. It came across my Facebook profile just at random. And I said, I need to go and look into this. So that's what I'm about to do right now with you guys live. So the first thing that I'm going to do is I'm going to share my screen. And if you are going to go through this with me, I need you to get to finance.yahoo.com. Finance.yahoo.com is what I use for pretty much all of my stock analysis. You can use any type of stock analysis website that you want. It's just that by habit, I like Yahoo. Back in the day, I used to have the good old Yahoo email. So finance.yahoo.com, which you see here, is what I use. All right. Now, the next thing you're gonna need, and I advise you to have, is some paper, something to take notes, a notebook, a computer with Word open so that you can take notes on what I'm telling you tonight. Okay. And I'll give you a couple minutes to just gather yourself on that because we are about to go in and analyze a stock that literally just came across my desk. And I said, that's interesting. I want to know more about it. So if you're ready, let's get started. So the first thing that I do once I identify a stock that I may be interested in, the way that I find out which stocks that I'm even interested in is I look at things that I use every day. I look at what I do every day, what I eat every day, what I wear every day. What do I consume? And from there, I go and I make my stock decisions. If you follow me on Facebook, you probably have heard me talking about overstock.com since last fall. Overstock.com has made me a lot of money. I spend a lot of money with them too. But overstock.com stock has made me a lot of money. And that is one benefit of investing in the stock market, because if you invest in where you shop, if you invest in what you know already, that takes a lot of the guesswork out of figuring out, well, hell, what do I invest in the first place? So my main way of picking a stock idea is to look into the companies that I already shop with. Where do I spend my money? And then I go and I determine whether or not I can invest in that company. So the company that came across my desk this evening was Fitbit. If you're into fitness, and I won't claim to be any type of fitness guru, I want to get into fitness more, and I have been thinking about buying a Fitbit for some time now. Okay, so I just got a tip today that Fitbit, the little fitness wearable gadget that's out and that's very popular, I got a stock tip like, okay, you might want to go look at Fitbit. So that's what we're about to do. I'm going to find Fitbit. There it is. The ticker for Fitbit is F as in Frank, I as in igloo, and T like Tom, Fit. Fitbit Inc. is what we want to look at. So I'm going to click on it here. Now, what this brings up when you search for a company ticker, it brings up everything about this company. So it brings up the stock price. Here's all of the summary of the statistical data. And then you have these tabs. The company Outlook is on locked because I'm not signed in to a Yahoo account. And I do not know if this is a premium service, but I never use company Outlook. But you have all of these different headers here that you can click on. What I typically look at first is the summary. We're going to be using the analysis tab for sure. A lot of people always think that the first thing that we're going to look at is a chart. Not necessarily. If you are actively trading in and out of a stock, then these charts are great. And I would not use a Yahoo Finance stock chart to make my trading decisions. And we'll talk about that another time. Again, you will have time to work with me directly if you choose to. But this is basically me running through my 5 to 10 minute financial analysis. This particular video is going to be longer than 5 to 10 minutes because I'm adding commentary. But me walking through the steps that I'm going to walk through right now usually takes me 5 to 10 minutes to determine whether or not I want to invest in a stock. Okay. So here I have, under the summary tab, I've pulled up my ticker for Fitbit. It shows that today, this stock closed at $6.35. All right. So the information that I got on Fitbit is that it would be a great stock to invest in because Apple, probably sometime next year, might, we don't know yet. Excuse me, not Apple, Google, all right, is probably gonna buy out Fitbit. So this is a company, they have been very popular. If you look here at their charts, they've been pretty up and down, pretty volatile. But anytime a company is acquired by a bigger company, that's always opportunity for growth. And I will go back just for a second and use Overstock as an example. When I first invested in Overstock, it was at $5 and some change per share. Overstock right now is trading, last time I looked in on it, it was trading at like $1.22, $1.24. And I bought several hundred shares of Overstock. So you do the math on the growth on that. So Fitbit may be a similar opportunity. I say maybe because anything with the stock market is risky. We're taking a guess, and the only way to make the guess be a fruitful one for you is to make it an educated guess. So what we're going to do is we're going to go in to finance.yahoo.com, type in the ticker for Fitbit, and we're going to analyze this stock. Fitbit is trading on the New York Stock Exchange. We have two main US stock exchanges. We have NASDAQ and we have the New York Stock Exchange. So right now, Fitbit is on the New York Stock Exchange. The first thing that I do is I look at the price, but I keep in mind that the price of a stock is not necessarily relative, and it doesn't say what the value of the company is. So never get really too tied up in the price of a stock when evaluating the company itself. Now, you want to look at the price of stock when you're thinking of affordability, like, can I buy enough shares of this to make a difference? But other than that, the stock price, it's relative. And I'll use this as an example. Tesla stock, yesterday it traded at over $2,000 per share. And I have not checked my portfolio on that today, but I think it beat that out today, because I was looking at my gains, and I made a little bit more money with them today. So Tesla is trading at $2,000 per share, but Apple, which is another company that I've invested in for years, Apple is trading at $400 and something per share. But we found out this week that Apple is the first multi-trillion-dollar company. So that's why you don't necessarily look at the stock price to assess whether or not a stock is valuable, okay? But I do look at the stock price to determine how many shares I can afford to go into. Because if you can't buy enough shares at once, like, people kill me buying one share of something and then being mad when they don't make money. If you can't invest in a significant amount of shares at a time or over time, you're not going to see very much price action. And that gets boring and frustrating, because I mean, we're all here for the big bang, right? No, but just kidding. But definitely people want to see some price action. So you look at the stock price to determine affordability, but you also kind of look at it for your own profitability's sake, because we're going to look at something later that kind of sees what the target estimate or future target price is. And we want to look at that to see how much growth there is in a company. So right now, today, Fitbit was trading at $6.35 per share. So the next thing that I go down and I look at is the 1 year target estimate. The 1 year target estimate for this stock is $7.35. Okay. So what the 1 year target estimate is looking at is a year from now. This is just the estimate, keep in mind, but 1 year from now, where might this stock's price be sitting? So now we're looking at that and we see, okay, a year now, they're only saying that this stock is going to be up $1 per share. So you can get an idea of how much money based off of the 1 year target estimate that you stand to make. There is a formula that I use for that I won't give right now, but we're just eyeballing this and seeing, okay, what's the target estimate? All right, a year from now, they're saying this might go up $1 per share. Now, one thing that you have to keep in mind is that multiple factors can determine and impact a stock's share price. So what did I just say in the beginning? I said that Google, in order to probably be competitive with Apple's Apple Watch, Google is rumored to be purchasing or buying out the company's Fitbit. So what do you think that's going to do to the share price? It's probably going to make that share price go up significantly more than $1 per share. Now, this acquisition is rumored to be happening sometime early next year. Again, we don't know. It may never happen. But at $6.35 a share, this is looking pretty attractive for me. Because number one, it's something that I am a consumer of or a prospective consumer of. Number two, it's something with a low enough share price that I can afford to buy this in volume. And when I say in volume, I mean at least 100 shares, 50 shares at a time or more. Because again, what kills me is when people go and buy 1 or 2 shares of something and then they're like, oh, the stock market sucks, I didn't make any money. Well, hell, you only invested $13. So you wanted to see $1,000 for $13? All right. So no, if you were to go in and buy 100 shares of this at $600, I'm sorry, excuse me, if you were to go in and buy 100 shares of this at $6.36, and it only goes up $1 a share, you're still you're spending $600, but you're still making an extra dollar per share on that. So your $600 and something investment is gonna be $700 and something with just simple math. Now imagine if it goes up a significantly more than $1 per share. You do the math on that. So the next thing that I want to look at is whether or not it pays dividends. This Fitbit is for the newer companies. They typically do not pay dividends. I love dividends, but this doesn't have it. If there is no dividend, that's not a problem. All the dividend is saying that that company goes in and it reinvests the cash and the money that it makes into its investors and into the company. So it's not a deal breaker if a stock that I'm looking at does not pay dividends. Usually the companies that pay dividends are your older, more dinosaur companies like Disney, for example. So Fitbit does not pay dividends, but that's not a deal breaker. The next thing that I'm going to look at is something called the 52-week range. Here is at the bottom here. This is the 52-week range. So the 52-week range ranged from $2.81 to $7.26. So what this 52-week range is telling me is where has the stock been over the last year? Okay, over the last calendar year, where has this stock been? It's been as low as $2.81 and it's been as high as $7.26. All right. So what you want to do is what I do is I compare that highest price, which in this case is $7.26. I compare that to the current price. And what did we say the current price is? $6.35. So $7.26 to $6.35. The reason why I do that is if the 52-week range is higher than the current stock price, there's a good chance that the stock can make it back to that high. If it already hit $7.26, there's a good chance that it can get back to that. So that's good. That shows me that there is some growth that can happen with this stock if I were to invest in it. All right. And we're still all in this same area on the left under the summary. We're going thing by thing. Some things I don't look at all, but I'm hitting everything that I look at. The next thing that I look at is the market cap. The market cap tells you the value of the company. Remember, I told you that you do not look at the stock price to determine the value of a company. Just because something has a stock price that's higher than other companies does not mean that the company itself is more valuable than the next company. As I stated earlier, one example of that is Tesla versus Apple. Apple is a more valuable company right now, but Tesla's stock is 3-4 times higher than Apple's stock. So right now, Fitbit, their market cap is 1.7 billion. So that tells you what size of the company, tells you their market cap, their market share, their value. What are they worth? At 1.7 billion, okay, they're pretty valuable. That's good. The next thing that I'm gonna look at right up under market cap is beta. Beta tells you how risky of an investment a stock is. The goal for me is to find a company who has a beta less than 1.75. Okay, less than 1.75. Anything over 1 is risky. Anything less than 1 is low risk. So the beta for Fitbit is 0.97, which is less than 1. So it's a low risk investment. That's amazing. Like I could almost stop right there and say, yeah, I'm buying this one. But it's close to the 1. But as long as it's not over 1.75, I'm not worrying about it. Basically what the beta is telling you about the individual stock. It's telling you about Fitbit stock's movement in relation to the overall market. All right. So it can kind of tell you what you expect the market and the stock to do. Again, there will be opportunities to work with me directly. So I won't get too deep into that. But right now, this stock is looking pretty good for me with a beta of 0.97. So that's a lower risk, and I like that. The next thing that I look at, very important, is the EPS. That stands for earnings per share. Now, this is where it gets interesting. The earnings per share tell you how much the company is making for every share that you, the investor, are investing. I like for this number to be positive because Fitbit has an EPS right now of negative 0.98. So that means for every share of this stock, they lose 98 cents. All right. So again, I typically like for this number to be positive, but I'll use Tesla as an example again. Everybody's so rah about Tesla. I too am invested in Tesla, and over this week, Tesla has made me a decent amount of change. But for the longest, and I think still, Tesla has a negative EPS. Negative EPS oftentimes mean that the company's not making any money. That doesn't mean they can't make any money. That doesn't mean they won't make any money. But you want a positive EPS, because if the EPS is negative, how are they going to pay you, their investors? How are they going to pay their shareholders? Okay. So typically I want that to be a positive number. So if I were analyzing this stock, I would give it a thumbs down for that particular mark. That doesn't mean I'm not going to invest in it, because you have to look at the whole picture. The whole picture is if they really are going to be acquired by Google, that EPS, the stock is going to go up in share price, and that's going to make me money. So we're going to say for the EPS being at negative 0.98. Now I will say I've seen EPS be negative $1, negative greater than $1. Tesla again is one of those stocks that had a negative earnings per share of like $1 and something for the longest, $1 or something or more. So was it a deal breaker for people to invest in it? No. Did I still invest in it? Yes, because we looked at other factors. But just to do this 5 to 10 minute analysis, I would definitely consider EPS, but it would not be a deal breaker depending on other factors. All right. So the next thing that I am going to look at is going to be the 5-year part of the chart. So on the right here, to the right of our summary information, you have the chart. Now, remember I said I don't really look at charts when it comes to this part of the process, because one thing that I'm not doing here, I'm not planning on trading in and out of this. Stock charts are very important when you're a trader and you need to know when is a good buy point and when is a good exit. If you plan to purchase a stock and continue purchasing it over time and holding on to it, the charts don't really matter very much. Of course, you want to get in, buy low, sell high. But if you're not going to be selling for a while, then it's perfectly fine to enter at a higher place than you would if you were trading. Okay. So on this chart, I want to look at the 5-year chart. And what's interesting about it is you can't look at the 5-year chart. Why is that? I would surmise, and I don't know because I have not watched this company, but probably because this company is not 5 years old. Okay, so let me just enlarge this. If we look at the 5-year chart, it's not available because they're not 5-year old. So if the company were older, I would look at the 5-year chart. But since they're not, I'm going to look at 2-year. It's saying that's not available either. 1 year. Okay, fine. That's all they have. Cool. So what we're looking at here for the charting, whether we're looking at the 1-year chart, 2-year chart, 5-year chart, we're looking at the growth of our investment over time. Okay. So we can look back as far as September, August, actually a year ago, August to September of 2019, this stock was at about $3. Then we see something happen around November where it went up to $7. Well, November, guess what time that is? That's holiday season. Everybody's doing their Christmas shopping. So there's more consumption of this particular product. So between November and see here, December is where we had that $7 price action. So guess what that gives me the idea of? We're in August right now. What happened last August? It was trading here and it went up 140% by November. And between November and December is where you saw the tremendous growth. So that is a heck yes for me right now, because I'm like, okay, this time last year, they were kind of down. And then around Christmas, everybody went out and purchased their family member, their child, their loved one, a Fitbit. Everybody has the New Year's resolution, I'm gonna get in shape. So what are we expecting for Fitbit in the winter months coming up? We're expecting the stock to go up. So this is a plus for me. And I'm looking at it from that time, from last holiday season, about November. There's been a lot of volatility in this chart, but it still has remained and held steady around $6. Okay. It has not dropped back down to the $2 or $3 that it was this time last year. So that's good to me as well. So this is telling me that there's a great opportunity to have some gains in this stock. If I go ahead and buy 100 shares now, by November, I might be, sitting pretty. And I use 100 because it's a nice round number, but you can buy way more than that. I probably will. With any stock, I always aim for at least 100 shares. At least 100 shares, okay? I'm not one of those buy 1 or 2 shares people. I can't stand it. It's futile to me, and those are the same people that get mad at you because they're not making any money. Always aim for 100 shares. Even if you cannot buy 100 shares all in one sitting, you need to commit to every pay period, buying 10, 20 until you get to your 100 shares. Okay. So this is looking pretty good for me as far as Fitbit. So right now I have looked at what I would look at and I say, okay, yes or no. Would I or would I not? Right now I'm saying yes. I always make my own decisions first before I go and look at anybody else's information. So the very last thing that I do After I have made the decision on what I would do, and right now I'm saying, yeah, I would buy Fitbit, is I go over to this analysis tab. The analysis tab, and this is why I love Yahoo Finance, because I have not seen the analysis breakdown, excuse me, on very many other platforms. What this does is tell you what the financial analysts at at Yahoo are saying, whether they would buy it or whether they won't. So for Fitbit, for 2020, this year, there were 4 analysts that took a look at Fitbit and they made their determinations. What you typically want, this analysis, these analysts are pretty much telling you what Wall Street thinks of it. So I've already told you what I think of it. I think I want to buy it. Now let's find out from the analysis, what is Wall Street saying about it? What are the people on Wall Street saying? What you typically want is for there to be greater than 70% of those polled. So we said 4 people, 4 analysts. We want at least 3 of them to give this thing a good rating. We want, excuse me, we want a recommendation of at least something that's greater than a 2.3. If it's less than 2.3, I don't want it. If it's straddling the fence or it's sitting right at 2.3, I might watch it for a while. But if it's greater than 2.3, I'm gonna look at it. Well, in this case, let's scroll down, and I won't explain all of these numbers here just yet. We're gonna scroll down and we're gonna look at the recommendation trends. That tells us out of the people that are polled, here are even more. The recommendation trends is what we're going to click on. Actually, let me backtrack really quickly. Remember I told you that I want that recommendation rating to be greater than 2.3. Let's look at the recommendation rating specifically right now. The recommendation rating for Fitbit sits at, hold on. Give me a second, I just lost my screen here. We're going back to analysis. All right, so the recommendation rating for Fitbit, my computer wants to go slow. So just bear with me and give me time for that to load up, please. What happened here? Well, I saw it at a 3. I'm going to get into it. I'm going to keep trying, but there's something going on that's not allowing me to go back into the analysis tab. So I'm just going to start from the beginning, type in Fit, pull that up. Well, that sucks, you guys. Issues like this is what take a 1 to 2 to 5 minute analysis. It takes it longer, depending on if you're having any sort of technical issues. I have very high speed internet, so I kind of feel like it may be them, but I don't know. I don't often have very many problems with my internet. So let's type in Fit again. At least we're getting some basic help on how to look them up. That's actually super, super strange. Like literally the stock went away. Here we go. Let's try to pull it from here. All right, we're back at it. Bingo. So we're going back to the analysis tab. And again, we're looking at the Recommendation rating, we want it greater than 2.3. Excuse me, I said that completely wrong. Excuse me. We want it less than 2.3. We want that recommendation rating less than 2.3. Because if you look at the recommendation ratings down here, 1 stands for strong buy, 2 stands for buy, 3 stands for hold it. That means if you already have it, keep it. 4 stands for underperforming. So if you're holding it, might want to watch it because it might come a time to sell it. And 5 stands for sell it. Get rid of it. If you're not in it, don't buy it. So I apologize because I kept saying more than. We want the recommendation rating. Let me say that again. We want the recommendation rating to be less than 2.3 because less than 2.3 signals that Wall Street is saying, hey, you might want to hold on to this or you might want to buy this. Right now it's sitting at a 3. So what that 3 means is that if you already are holding Fitbit, if you already have invested in Fitbit, keep it. Just sit it and hold it. All right. If you don't have it, you want to make a decision for yourself whether or not to buy it. I already told you before we got to looking at someone else's analysis that I want to buy it. All right. So just because it's sitting at that 3, which is greater than the 2.3, doesn't mean that I'm going to listen to them because they, at the time of this rating, did not have this new Google information. So what I may do is come back on next week or in the coming weeks and see if this recommendation for Yahoo changes at all. One thing I like to do here, the recommendation trends. So what this looks at, if you look at these colorful charts here, it's saying that since May, August, July, June, May, it's counting backwards. Looking backwards in retrospect, 3 to 4 months. Out of 15 analysts, 10 of them are holding on to it. A small percentage here in the red are saying sell it. And a few people up here in the green are saying it's a strong buy or a buy. So this is still looking good to me. Nobody, not very many people are in the red saying it's an underperformer or to sell it. There are more people or more analysts saying hold on to it or buy it. So for that, I think I have made my decision to go ahead and invest in Fitbit. You do your own due diligence and you make your own decision. But congratulations, I have showed you how to analyze a stock in about 5 to 10 minutes or even less. This whole process, this video is longer because I'm explaining things, but once you get into the habit of going through these steps for every stock that you arrive at, guess what? You're going to get faster and faster and faster. Okay? So just keep in mind again for these recommended ratings, we want it to be less than 2.3, but if it's sitting right there at the whole point, you already have it in your portfolio, hold on to it. If you're thinking about getting it into your portfolio and it's sitting at the 3, then you just may want to look at other factors. The factor that I'm looking at is the fact that holiday season is coming up. Last year, there was tremendous growth in this stock around Christmas time, Thanksgiving. And lastly, I got a tip that Google may be acquiring this company. So for me, I'm going to buy at least 100 shares of this. And that is my just as brief as I can get it, overview of how I go through and analyze a stock for whether or not I'm going to pick some of it up within about 5 minutes or so. This is something that I was going to do today. About an hour ago when this came across my desk, I'm like, let me go analyze this stock and see if I should pick some up. So I said I will record it and do it with you guys. And I have done it. Congratulations. If there are questions, you can feel free to email me at bookdrb@gmail.com. That's B like boy, OOK, Dr. B, DRB, D like David, R like Robert, B like boy, at gmail.com. And if you want more information and you are wanting me to help you analyze a stock, or you're wanting to sign up for consulting with me regarding the stock market and stock investing, that's the email to contact for now. We will be reactivating my old investment group, or my old finance education group, the Gold Diggers group, soon. So I'm going to be putting this information in there. That way we can all collaborate and communicate on these various topics. But happy Friday to you. I hope you have an amazing, restful weekend, or whatever you want to do. If you be as active or not as you want to be, but have a happy weekend. And we'll see you in the markets at 9:30 Monday morning. Have a good one.